afternoon, everybody. Welcome to the TraderMerlin show. It is your Tuesday afternoon edition. I'll get your camera here in just a second. Hopefully it pops out. There we go. And now we should have a camera. Cool. I'm going to start today's show off with just a simple comment of, I should have titled this the show. This is why we have rules. So over the past couple days, especially since Friday's show, we looked at the weekly close of the NASDAQ 100 and said, man, looks like there's some pretty good probability that the market's going to sell off Monday and Tuesday. That was my thought going into the weekend. I was all ready for it. I had the game plan in place, and I was like, all right, here we go. We're going to get a great short on Monday. On Monday, I had my numbers in. So let me just bring it up here. I know we talked about this yesterday, but I want to revisit it because I think it's really important. If you look at this number of 75.19, right? We tipped across it on Monday, triggered me in, followed my rules, stopped out, took a few $100 loss. No big deal. And I was of the opinion that that line still is relatively fine. I'm okay with it, even though it did break through. And I know the purists out there are going to say, oh, well, it broke through that area of demand, therefore it's no longer there. I still think that you have some unfilled gaps that go back to like the 11th or 12th of July that would fill there. So I was watching this one again today, and man, I wanted to short it. I really was like, oh, gosh, this thing's it's going to go down today. And my opinion, as you guys all know, means nothing, right? By following the rules and not getting into it today, saved myself a lot of pain because the market pretty much rallied most of the session, right? It was just a great day for the NASDAQ 100. And of course, we'll talk about some of the earnings. So I wanted to start with that, which is, thank goodness we have rules. And for those of you who don't have a trading plan in place, you can go back through the TraderMerlin archives on YouTube, type in trade plan, and there's a couple different videos in there. Some where I talk individually, some where I have guests on the program. And we all emphasize the importance of a trade plan, what you should do in your trade plan, how you should build it out. And if you don't have a trade plan, most likely you're shooting from the hip and you will never get to consistency levels. So anyway, starting off with a rant to start things. Here is our AI generated graphic today, which looks actually like photorealism, doesn't it? I mean, that's the CEO of Microsoft right there. And I'll tell you what, it looks pretty damn real to me. You had Google and of course the UPS strike. Now I'm going to start, of course I'm out of breath already, because it's hot up here as well. No AC in the upstairs studio, so gonna be a bit toasty here today. If you think about what the US or UPS strike could have done, it could have been a massive blow to the US economy. Now, the headline news today is there's a tentative agreement, right? The contract ends August 1st for the UPS workers. If it went past August 1st, it would probably be worse than a government shutdown just because of its sheer impact. Government shutdown, everybody gets paid at a certain point. In a strike, people don't, and it can get ugly. I've actually was involved in a strike when I was in the grocers union when I was, I don't know, my early 20s. Not a fan personally of unions because I think there's some people that work really hard. I think there's other people that mail it in and milk it because they know it's almost impossible to get fired once you're in a union. Anyway. The numbers that I was reading were pretty impressive. UPS does in 2022 did 24.5% of all of the shipping in the United States. That's pretty amazing. 24.5%. That's a quarter of the market. One company, amazing. They averaged 22 million packages a day. Now the numbers are conflicting here because I guess the labor organization or the Teamsters union rep was saying that they do about 7% of GDP. That the work that UPS does, the distribution and moving of goods and services, etc., is about 7% of GDP, whereas UPS says it's between 5 and 6. Regardless of which number you look at, I think you'd all agree that for one company to have an impact on 5 to 7% of GDP is a little bit frightening. And the fact that they were going to go on strike and potentially shut down that transportation network of goods and services, of delivery, all that could have a massive impact. And they were estimating that it was going to be billions of dollars. They said if it was a 10-day strike, it was about $7 billion. So, call it roughly $800 million a day if UPS were to go on strike. Okay, fine. Obviously pretty impactful. And you're probably asking, has this happened before? Yes, it happened in 1997. They went on a strike for 15 days, and they only had 185,000 workers back then. Now they've got over 335,000 workers. So they've certainly increased their size and now are at this point of too big to fail. So the question from yesterday, which I think is resolved today personally, was what happens if they go on a strike? if they go on a strike, I know, right, Simon? 22 million packages per day. It's insane to think about. You know, I gotta say, while I appreciate that UPS delivers so much, I'd love to see the numbers on what Amazon delivers. Because I mean, I'm using Amazon for almost all my shopping. I don't really get much UPS packages. It's all coming from Amazon drivers. I want to bet you Amazon maybe higher, but we'll look at that another time. So where was I? No, not yet. Didn't do the popcorn trades yet, Lisa. So if they go on strike, and we're not out of the woods yet, it's a tentative agreement, which means that they've both come to agreement. It's okay, this will work. It still has to get voted on by the members of the union, which most likely they'll be encouraged to do so, because from the talk track by the Teamsters head, the CEO of the Teamsters union, they said it was the greatest contract victory they've ever had. It was a win-win-win. And it really made it seem like they pulled the wool over the UPS company. And I was like, nah, it can't be. Of course, UPS knows if they go into a strike and there's a big shutdown, that could cost them billions of dollars. So, where do you want to pay those billions of dollars? Do you want to be amicable, agree to a new contract, which has significant increases in pay for the employees, which of course can eat away at UPS's bottom line? Or do we look hostile and unfriendly towards our workers and make them go on strike, which is going to cost us billions of dollars? We'll come to some settlement, which are probably better terms for UPS, but the damage is done from a PR reputation perspective. And I think UPS probably did the right thing and said, okay, it's going to eat into our bottom line. Let's lock it in for a longer term contract, and then we'll just not worry about this one for many, many years. And I think that that's really what it is. Yeah, what about FedEx as well? I'd love to see the numbers. Well, think about this, Lisa. If UPS went on strike, and this is where the opportunities were going to lie, and that's what I was going to build today's show at, but of course they have a tentative agreement. If UPS goes on strike, who's going to be the recipient of the vast majority of that shipping needs, right? You're going to look right at FedEx. They're going to be the first and foremost one that's going to benefit from it. I mean, U.S. Postal Service, FedEx, good news for them. So what would the price charts look like? And I was going to say you could also look at shorting UPS. So here's UPS, United Parcel Service. So even on the resolution today, you have this really kind of volatile candle. It's one of the biggest ones on your screen here. Lots of negativity. It was a big green candle at one point, but ending lower on the day, down about 1.94% for UPS. And I was kind of surprised, honestly, to see UPS still moving up, even though these talks were starting to get a little contentious, right? They kind of shelved the talks and wanted to discuss it. But I got to be honest, when you look at the chart of UPS, if I was a shareholder of UPS, I don't know how excited I would be. If you look at the past since mid-2021, you look at August of 2021, it was $156 per share. You're at 184. So over the course of a long time, I'll just pull it from there to there. Over the course of 749 bars, which is over 2 years, you had a 30% gain, which still is respectable. Let's be honest. A 30% gain is going to be fairly respectable. But let's go and show at... Yeah, it's showing 184 in after hours. Correct. It's dropped a little bit in after hours. Let me go and show you FedEx. There's FedEx. Right, and FedEx has actually been on a great run, and I think that, possibly this was due to the belief that, hey, if this does go south for UPS, FedEx is going to be one of the big beneficiaries. And there's a lot of other different transportation companies that would have been the recipient of it. However, now that this has been done, I think that there's not really much of a worry that there'll be a strike. It's still on the table potentially, but again, we have August 1st coming up. And if that's not agreed upon by the members, then we could revisit this discussion and think about, do we short UPS? Do you start going long on FedEx? Do you just buy some options on these just to play in case we get that black swan event? But even if the union members agree on it, it still has until August 22nd to be approved by the union execs itself. So there still is a ways to get here. Let's get really bullish after the Fed and with all the retail traders. Well, obviously I think that this is going to be very bullish for UPS, because now you have an obstacle that has been removed, right? You're not going to have the Teamsters come up next year and be like, oh, we're going to, complain again and want more money. Depending on how long this contract is for, and I didn't see that. I didn't see how long the contract was for. I will look for that tonight so I at least know my details. Some of you probably know. But that contract runs for a certain amount of time. And then at the end, we always get these strike, threats by the Teamsters or whatever union it is, because we want more money, want more money, more money. Now, the thing that was interesting in this, just so you guys know, I mentioned that it could eat away at the bottom line of UPS. So one of the things in this contract, and there's a lot of stuff in there, but the one that stood out to me was UPS is looking for $2.75 an hour more for its part-time workers. Now, I know personally that part-time workers, we think part-time is like, 5, 10, 15, 20 hours. No, these guys can work up to 30 hours a week. So they're almost full-time employees, and then they get paid overtime if they go past certain time. It's weird the way it's all set up. But that's a big increase, and UPS has a lot of part-time employees. So I'm just curious how much money this is going to eat away at their earnings announcement. Not the revenue, because they'll still make their revenue. That's top-line sales. But when you figure out how much those sales cost you, what are you left with? This may ding UPS going forward. And that's possibly why we saw that negative reaction today, just knowing that the costs are going to rise significantly for labor costs for UPS going forward. Anyway, I think it's one of the reasons. Yeah, I agree with Mario. I think just about everybody's bullish right now. And I'm bullish. When the last time you heard me say I'm really bullish? And you just got to go with the trend. I wanted there to be a pullback just because the weekly candle, I wanted that to follow through. In honor of Bob Dunn, I was hoping that weekly candle would have crashed and seen it go down. All right, next on our list, we've got Microsoft and we have Google reported earnings today after the bell. Mixed signals there. One doing phenomenal, one doing meh. Yep, part-time is union. You're still part of the union. Still pay your dues. At least according to the article that I read. When I worked in the union, I was full-time. But here's the earnings for today. You see Microsoft, they beat earnings, and Alphabet beat earnings, or Google beat earnings. I'll still call it Google, even though it's supposed to be called Alphabet. Those both beat earnings, and pretty handily, although Google soared up 6.95%, and Microsoft tanked. And it brought up a really good question. Let me make sure I can get this one here real quick. I think it was from Drew. So Drew asked me this one, and it's a good question, Drew. He said, which will have a bigger impact tomorrow, Microsoft or Alphabet? It all boils down to their weightings. So I would say which is going to have the biggest impact? It's going to be Microsoft. And that's merely because it represents about 9.8% of the NASDAQ 100. So it's the number 2 heaviest weighted one. So at surface value, that's going to have the highest impact. Google or Alphabet, because it has GOOG and GOOGL, as you can see here on the earnings page. All right, you see GOOG right here, and then you see GOOGL just below it. Both of those two combined make up about 5.5% of the NASDAQ 100. So just on those two values, got to say Microsoft would have more of an impact. However, you have to look at the gains that were made in the after-hour session. So let's go look at that real quick. So here's Microsoft. And I will bring this up into a 5-minute chart and show you the after-hours so you guys can see what went on with the popcorn trade of the day is Microsoft. And it really, when I first saw this, I was like, oh boy, here we go. Maybe I do get my short opportunity tomorrow. So check out the candle that formed in the first minute after that announcement release. I'll make it a 1 minute just to make it even more exciting. Here's a 1 minute chart. So in that 2 minute window, it fell from $351 all the way down to a low of what was that low? $338. So it fell $13 in 2 minutes and has now clawed its way back up and pretty much erased most of those losses. It's still down about 1.12% in the after-hour session. The point I'm making here is if Microsoft was the only big name reporting tomorrow, NASDAQ's going to have a little bit of a pinch because it is the second biggest component of the NASDAQ 100 and it's down 1%. However, we look at Google or Alphabet, whatever you want to call it, looking great. This has been massive move to the upside. It's 7.54% gain right now for Google, which is only 5.5% of the index. However, it's such a greater percentage gain that Google is going to be the one, at least for now, that has the biggest impact on the NASDAQ. And if we look at NASDAQ futures, you can see right now they are in after hours up. So right here where my cursor is, I'll put a horizontal line right where we closed. And there she blows. So we closed right there. We closed at a pretty low point. You can see right after, big drop down and then rip back up. So we're seeing the impacts of Google here carry this NASDAQ back up into almost near highs for the day, whereas Microsoft, even though it's a bigger weighted component in the index, being down just 1% really doesn't have that big of an impact. It's kind of a wash and actually more of a positive sign when you look at those two components, the NASDAQ for Microsoft and for Google. So great question there, Drew. Who's going to have a bigger impact tomorrow? Bottom line is who's going to move the most. So if we open up tomorrow with the same numbers with Google up 7%, Microsoft down 1%, then Google will be the one that has the biggest impact on the NASDAQ, and that will be the upside and usher in some positive comments or positive moves for the NASDAQ. There you go. All right. What else did we have for OG? Oh, let's talk about General Electric. We talked about GE on yesterday's show. Actually got a question a couple days ago from one of the viewers about GE. Here is your GE results for today. So all in all, pretty nice. You had a really nice gap and go this morning. You can tell their GE numbers here. They beat by 22 cents and were up 6%. And that was before market open, which obviously was a nice little pop for the market, pulling the markets up a little bit, even though it's not the heaviest weighted in any of the indexes. As far as other earnings go, you had Visa reported aftermarket. They beat earnings as well. You had General Motors, which they beat earnings, but were down 3.5%. You had Snapchat, which I've been saying should go bankrupt a long time ago. They were down 18% today on an earnings beat. They did really good on their earnings compared to previous numbers, but still got smoked, down 18%. You had 3M report earnings today. They were good, up 5%. You had Archer Daniel Midlands, Texas Instruments. Texas Instruments did miss, but all in all, pretty good earnings across the board. Just a few companies out there missed, those companies being... who missed? Nobody missed on this. I thought I had companies that missed. They were actually, everybody on this top list beat earnings today. Oh boy. All right, we'll talk about the earnings that are coming out tomorrow here in just a little bit, but that GE chart looking great. And again, we had a question on, what's going on with it. We talked about the different splits of tough companies, which you had GE Healthcare, you had their energy, which is going to be Vernova, and then their air and defense aviation company. So all in all, great news for GE. It's just a question of where do you buy? Right, really waiting for a pullback here, but I don't think that they will, you're going to get one. This feels too strong right now on General Electric. I mean, this is like one of those Where's Waldo puzzles. Like, spot a meaningful pullback in the last 8 months. There isn't one. All right, what questions do I have coming in here? Microsoft will just talk AI in their conference call and shares could jump. Sure. You know the routine, Mario. I mean, that's what's going to happen. They'll talk AI. They'll talk about how they're implementing it and how it's increasing efficiencies and talk about their bottom lines. And most likely they'll start to move back to the upside. What's my thoughts on Microsoft? Crazy movement after hours. Will they continue up or down? It's tough to say definitively. Obviously, my opinions on the markets for the past, 4 shows have been completely wrong. So I don't even want to put myself out there because it feels like I'm just getting swatted all the time. Every time I say something, markets go the opposite direction, but I guess that's the nature of the beast. If you look at the chart, right here is your daily time frame, and going back into November of last year, beautiful uptrend, keeps on going. Now they have it here as an earnings miss, which I'm surprised. I didn't think that they missed earnings. Everything I saw said they beat earnings. And again, here, look at the headlines here. The earnings have been hurt by cooling software demand. No big deal. Microsoft exceeds fourth quarter. Yeah, so it's weird that they have it visited as negative here. It's actually 1/10 of a penny that they missed by, which seems kind of strange to me. But from all I read, they beat earnings out there. So trend-wise. So Lisa says, where do you think where they're going? Well, it was weird to see that reaction intraday. When you look at that earnings announcement, that 1-minute chart that I showed you, when they released their numbers, which were fine, in line with expectations, it fell significantly, had a huge drop, and has now clawed its way back. So I'll be honest, Lisa, I don't know. I have no clue what's going to happen out there tomorrow with Microsoft. What information gets digested tonight. It still feels rather positive. I'd like to see what they say at the press conference about their guidance going forward. I think that'll be very telling, and we might get some moves tomorrow morning because of that. Now, going to Mario's point, most likely that press conference is going to focus on the good aspects, and they'll glaze over very quickly the things that have been costing them money. As I said, software demand has been declining, but cloud storage, AI, that stuff going to be getting better for them. They'll focus on that, drive up positive news on that conference call, and hopefully we'll see them positive tomorrow and the markets continue their nice little rally. Speaking of which, hey, why be anything else, Lisa? Why be anything else but honest. I mean, if you want to be dishonest, you can go work with the Chicago trader who I hate, and he's the Voldemort who shall not be named. That's a dishonest individual. So go with honesty. It's a better policy. So let's go and look at our top 7 or 8. I keep forgetting we added one in here. Dollar index. Do the wee little dollar. So we've had 5 days in a row of beautiful pullback retracement on the dollar. I actually thought we'd stop here at the 175. Nope. Rallied all the way up. Hit a high intraday today of 101.64. So much deeper pullback than I thought we would get. We're not out of the woods yet, right? Typically when you have a sell-off and a breakdown below a neckline on a head and shoulders like this, you do get a retest and then it starts its neck leg down. So we'll have to wait and see how that pans out. But that move up, I thought would put more downward pressure on the equity markets. It has not. So there's a disconnect happening somewhere because typically the more the dollar moves up, the more likely the equity indexes move down, and we just haven't had that. So kind of a weird outlier there. Today, slightly down, hesitation after a nice 4 or 5 day rally in the dollar index. So if you're looking to play markets, you could put our lines above today's high and low on the dollar index and play those breaks. If it breaks to the upside, you should have a short bias. If it breaks to the downside, you should have a long bias. Russell 2000. The rut on the day, almost unchanged, 0.02% difference. Really nothing to speak of here from anything of trading substance. It was just a small little range, open and close right around the same price. The dollar's not going away anytime soon, Skilled. Nope, it's definitely not going away anytime soon. We got a few years before we get to that CBDC, but that'll still be a digital dollar. And we'll still be tracking the price of the dollar, and it will have a dollar index. Here's your 10-year, which had yields rise today. We're already in the new session, so yields were up ever so slightly, although it's not dramatic. We are seeing an inability to make new lows that goes all the way back into May. So for anybody here who's bullish on yield, which means you are bearish on the prices of these bonds, things like TLT and SHY, you should be seeing TLT, declining. And as you see here, it has been declining over the past 4 sessions. Typically when yields rise, these values of the bonds actually start to decline. So 10-year moving ever so slightly to the upside. It feels really sideways for about the past year. However, not making new lows is a positive sign for yields moving forward. And after the housing numbers yesterday, we're stuck in a conundrum here. Do you really want to see yields rising when we're already seeing Case-Shiller Composite 20 Home Price Index numbers come out negative and showing year-over-year contraction with prices? So to me, I think we're in kind of a tight spot. And I don't think the discussion is off the table yet of stagflation, which we talked about that about a year ago, was being the real worrisome one. But we haven't seen that unemployment number start to rise yet. Just barely move up. What we are seeing is home prices fall significantly. And let me show you the Case-Shiller Composite 20 Home Price Index. I was actually talking with a friend last night, and they were talking about buying a home. I said, are you sure you want to buy a home right now? He's like, well, we just sold our house and we want to buy another one. I said, if you buy right now, you're buying homes at very elevated prices. You're also going to be financing with very high rate, not very high, but high rates compared to the norm that we've had for the past decade or so. You're looking at 7% for a 30-year fixed rate mortgage, whereas you could have got it for 3% just a couple years ago. So this is the one that I told him, I said, you might want to look at this. This is the Case-Shiller Composite 20 Home Price Index, which shows home prices in 20 major metropolitan areas of the U.S. declining significantly. We came out, or you look at the Tuesday number. Why am I not getting the refresh number? Let me get the refresh here. There we go. So go back to Tuesday. Our number came better than expectations. They thought it would drop to negative 2.3 from negative 1.7. We came out at 1.7. So the good news for anybody who's in the housing market, real estate segment, is you're seeing at least a sideways action here with regards to home prices, meaning they're falling, but they're not falling at an alarming rate. They dropped 1.7%. So this is going to be year over year. What you're looking for is this number to kind of move back up above 0. If it keeps falling here, then anybody looking to buy a house right now should not look to buy a house, right? Step aside, don't be a buyer, don't prop up the market because it'll probably fall even more if demand subsides. And if I look at the factors for demand, it's pretty clear. We talk about mantras. Mine, if I got a tattoo, would probably say the trend is your friend till the bend at the end. And if we look at this chart of home prices, well, that trend is clear. It's down. Now it's gone sideways kind of for the last 3 months, but I still think that there's a good possibility this trend could continue down. So why buy a home when you see prices being negative here? If this started to trend back up, then okay, great, because you'll most likely gonna have trending higher prices, meaning what you buy will be worth more in a certain period of time. So that's one negative aspect. And the other part here is going to be this 10-year, just the cost of money. And if the Fed keeps doing what it's doing, which is raising rates, then you'll see this most likely rise even more, and that could price more people out of the market. So, as someone who's going to look to buy a stock, what are we looking for? We're looking for something that's start off with as a good trend. Up or down, doesn't matter. Even sideways, right? Going to have one of those three things. And then from there, we can wrap a trading strategy around it. Housing is different. If you're buying physical homes, you can't go short. So you need an uptrend in prices. Otherwise, why are you buying it? And if you see that the home prices are declining, your only real choice there is to step aside and wait for it to slow down or bottom before you buy back in. Anyway, a little rant there. Now, on that note, I don't know if you guys saw what happened with the Fed funds futures. I was talking about that over the past. Realtors have to get other jobs where I live. Yeah. My pops has been a realtor the vast majority of his life. He's been doing it a long, long time, and he doesn't do it as active as he used to. But it's definitely competitive. It's definitely very difficult. But there will always be people buying and selling homes. It's just sometimes you get more of a heyday, a gold rush day, if you will. And I think that. In the conversation I had last night with this friend of mine, I was like, look, take your money that you made from your house. You're going to pay your taxes on it anyway. So pay the taxes on it, put that into account, and grow it. Because and this is a big if we do get a housing correction, 10, 15, 20, if we get a crash of 30 or 40%, you're going to be the one there with a large sum of cash. You'll be the more attractive buyer when you're making offers, and you'll get priority really when you're making offers. Now, what if you finance at a higher rate at that moment in time? That's okay, because when you have the two factors of your home price and your mortgage rate, one of those, they're both going to change, but the price that you lock in on one of those will not change, right? When you buy your home for $500,000, you paid $500,000, period. You can't renegotiate. If prices fall 50%, you can't go back to the Realtor Association and say, could I redo this at $400,000? Like, no, you're losing money, buddy. The other side of it is, let's say buy it at $500,000, and then they have a 7% mortgage that they locked in. Well, 2-3 years down the road, when that market starts to drop and get back down to 3-4%, you can refinance that. Now you bought your home cheaper, and you're getting a low mortgage rate. So those two variables, I think, are very important. I don't know why I went on a real estate rant, because I'm sure most of you probably don't really worry too much about real estate. It's more of a trading channel, but I don't know why I went down that route, but there it is. Tom Barr says, that's a national real estate chart. You and I are in an area that people are fleeing to, so we should be good. Actually, they're fleeing out of California. There are more people are leaving California. And now, Tom and I are in Southern California, which is an area that's a bit of an anomaly, right? We're south of Los Angeles, that armpit up there that's called LA, that is just pretentious, superficial BS I can't stand going to LA. Not that SoCal is not pretentious or superficial, but at least there's a little more niceness to it, and not everybody's trying to be an actor. So, the areas that are going to be impacted are, I guess all areas will be impacted. And when we say the Case-Shiller Composite 20 Home Price Index, remember that's 20 different markets. If you look at buying a home and you're interested in buying a home, the information I just said is a blanket statement. It's very, all-encompassing. But that's not how real estate is, as Tom Barr says. There's going to be markets that are going to do extremely well, and there's markets that are going to do extremely poorly. For example, Austin, Texas, since 2014 through today has been almost parabolic. And now it's ripping down. So you're going to get these market timing aspects to it. I remember in 2009, I was looking to buy some properties in Miami and Las Vegas. I ultimately said, I'll buy a place in Orange County. And in hindsight, I should have bought in Las Vegas and in Miami, because those prices have just had a much bigger surge up. But that's just the luck of the draw. We'll probably have better price stability here, because in Southern California, you got this beautiful sunshine and beaches and just a lot of things to do, whereas some other areas of the country might face bigger swings due to lack of demand if people say, I don't want to be going to that part of the country anymore. So there is a life is better in the OC. It's pretty good, Rob. There's definitely arguments to be made for going someplace like Austin or Colorado or heck, even Seattle. There's certain good things about almost every city except Waco, Texas. I don't get Waco. It seems like everything. I watch these FBI files. It seems like every other episode's about Waco and how crazy Waco is, but I'm just kidding. I'm going to offend somebody on the program today. I know it. I'm down to offend somebody. So, yeah, we should be okay, but we still could get declines. You know, when we saw that Case-Shiller Composite 20 Home Price Index showing a 1.7% slide, I'm already seeing that here, right? Because in my neighborhood, there's been just this parabolic move up. You're going to have a pullback in price. It's just the nature of it. So if you're buying a home, check that local market and see what the trends are for that market. The Case-Shiller 20 is very broad and all-encompassing. All right, let me go in through, because I'm going to try to do a shorter show today. Actually, I had another thing we're going to get to. Okay, let's ask this one. So let me answer this question for you. We've been taught that we should have open interest of at least 10,000, but if we are only trading 1 or 2 contracts, is it okay to take a trade if the open interest is only about 5,000, if the spread is not too wide? Talking about spreads, how do we determine what the spread should be depending on the price? So I look at open interest as kind of like volume on a price chart. So one of the criteria I use for filtering is when I'm trading a stock, I want to make sure it trades an average of 1.5 million shares per day. That's a bench line statement. If I look and I can see on the level 2 that it's fairly liquid at that moment in time and I don't have a big block of shares, could I trade something underneath 1.5 million? Absolutely. And I would say the same thing for you with this option side of thing, Les. If you are using 10,000, there's a purpose for that. You're making sure that there's ample liquidity so you don't get slippage, and usually spreads are much tighter. So if you're trading something that's 5,000 or even 2,000 open interest and that spread is real tight and you only have 1 or 2 contracts, yeah, I think that that's fine to trade. But at least from my perspective, most people don't look at the liquidity of what it is they're trying to trade. Right? They don't look and see how liquid it is. Is there enough for me to get in and get out of these positions without incurring significant slippage? And that's just why OTA says, hey, here's a line for you to use as a basis. And that's universal. Of course, you can always modify those once you get more comfortable and understand it. How do we determine what spreads should be depending on price? Well, it's a combination of price, liquidity, the underlier, but I don't have a formula for that. Generally, all the things that I trade are going to have at least 1.5 million. You know, when you look at especially the ones I do heavy options on, right? These are all the ones I do. Oh, did I pass it? Forget, I move my list around here. These are all the lists on the right-hand side here of what I do my 1% strategy on. And most of these are pretty liquid, right? You look at things like IYR. This one is a little less liquid than some, but it's averaging 6.6 million shares per day. Here's XLF Financials. You're looking at 36 million per day. XLY, another thinly traded one at 3.2 million, right? That's the consumer discretionary. I've got Industrials, another thin one, 8.7 million. Healthcare, 7.8. I got Utilities, right? So the main reason I went with these is I know that they're going to be liquid overall, so I don't even look at the option chain. I look at the spread, but I don't look at open interest because I'm certain that there's plenty of action, especially when I'm only going out 30 days on it. So that's kind of how I'm viewing it. But just throwing out there as a little asterisk to everybody. Make sure you check your specific symbols. If you're trading something like, how about SWKS? So here's Skyworks, 1.7 million. This would still make my filter, but I'd have to, if I'm trading big with the options, I'd have to go and look at the option chain just to make sure A, spreads aren't too wide, and B, that there is enough liquidity if I'm trading a big block. I mean, you saw when we had Corey Lane on the program the other day, I thought that was great. He was talking about the amount of options that he was in. I actually wrote it down because it was like, holy cow, brother, that is a monster block. What was it, 24,000? Real quickly, make sure I can find it here because I do. 18,322 options that he was trading on one ticker symbol. If you're doing something like that, there's no way you're going to trade 18,000 options contracts on Skyworks and not have an impact, right? This thing it has low liquidity. Remember, 18,000 options contracts is it's 1.8 million shares. 1.8 million shares. You're going to have an impact on that. Whereas if I did 1.8 million shares of something like XLF, I might have an impact, but it's nowhere near as significant as it would be on Skyworks. Natural gas futures, do you think it will be the bend at the end if it passes $3 on the weekly chart? Great question, and it's funny because you've been watching natural gas feel like it's found a base, starting to slowly move to the upside. But the problem with natural gas is Summertime. You know, what do we need here? So here's your natural gas chart. Let me take that volume off there. You know, you can see it's certainly stabilized. I mean, we've been going sideways since February, but now it feels like it's starting to make higher lows again. Get the higher low, higher low, higher low. You know, from here, I want to see it break this high of 280. I'd like to see it get to $3. If it gets to $3, which would be this high that we saw all the way back here in March, I would expect it to hit 3, pull back a little bit, and then if it does have that strength, continue in. And as we get to the later in the summer into early fall and winter, you know, does that now make the argument that we could see $4, $5, $6 for natural gas? I mean, you can tell obviously on this chart, tremendous volatility all over the place, but really on the weekly, as you were pointing out, you know, we came back down to those lower demand zones that it hadn't been below for a long time. I mean, last time it was below $2 mark. Last time it was below $2. Oh yeah, this was modified. Sorry, I thought we were below $2. $1.50. Last time we were below $1.50. You know, you're going back in the 90s. Below $2, which is where we kind of stopped at right here. You're going back into 2020. So to me, you're kind of back towards the historical lows. I think that if you are a long-term, someone's going to hold this stuff long-term, I think you're okay. Just I would stay away from the leveraged and doubles and triples of this one. But I think it's starting to form the bend at the end. I do. What kind of gap is that in March? March. I don't know. I don't know which March we're talking about. You're talking this bad boy here? Not sure. Not sure, Margaret. It's OC. Oh, guys, I've been spending so much time. You know, one of my things I love to do, I love going and playing trivia. I like trying to solve puzzles and things like that. Now that I host trivia on Tuesday nights, I've been just spending so much time creating trivia rounds, and tonight is trivia night. So I'm gonna wrap up the show here and get my rounds ready for tonight, and hopefully have a fun evening of trivia. Let me go to one last thing here. This is from Jeff. I know I have a couple questions I didn't get to, but I got to kind of wrap things up. Jeff says, how is market cap calculated? FTN, Fortinet has a market cap of $60 billion. Is that even helpful? Cisco has a market cap of 218. Broadcom's market cap is 367. CrowdStrike's is 34, which are all competitors to Fortinet. How would you use market cap? Well, market cap just tells you the number of, it's a simple math equation. You take the current share price and times that by the outstanding shares, and that will give you the valuation, meaning the market capitalization. How big is this company? So I don't use it as an investment decision. It's not something I go, oh, wow, this thing's got a $100 billion market cap. Doesn't impact me at all. Now, if you're a fundamental analyst and you are going back through and you're saying, okay, here's CrowdStrike and here's Palo Alto Networks and here's Fortinet, which are all in that same competitive space, how big is Fortinet relative to those competitors, right? And this is only if I'm doing fundamentals. If I'm a technical trader and I'm just doing day, maybe swings, I don't care. Market cap is irrelevant. Doesn't matter at all. If you are a fundamental person, I do think it does have some impact because you just want to see how big it is relative to its competitors, and maybe it's the small fish that could become the dominant one in the pond, or it's the dominant one in the pond that all the other fish are trying to go after, which means, you know, you got more competition coming up. So that's the only way I would look at that one, Jeff. That's how I use it. What's the best non-leveraged NG for holding long-term? Well, here's the thing. With these ETFs or with natural gas products like UNG, is probably the most liquid, biggest one out there. The problem with these is they're comprised of futures contracts. So as you guys know, you've got contango and backwardation that goes on with future contracts. And what that means is when the contract rolls over, and this UNG holds a portfolio of futures contracts. So let's say they have the Septembers right now, and September's coming to a close, and now they want to go and buy the December contracts. Well, the December contracts are most likely going to be higher because that's the future, right? That's future prices. So what happens when they buy that, you get a gap up. So let's say the September contract, I'm just making up numbers. The September natural gas futures contract, let's just say it's 270. And then you look at the December and it's 285. So when they roll over, that 15 cents disappears. You don't get that as a gain. Even though crude oil may go, or natural gas may go up in time, it doesn't get the full brunt of the move because it's rolling contracts, and every time it's buying a contract, most likely at a higher price. So you could use UNG. I am long UNG right now, one of my accounts, so I've got 4,000 shares of UNG. But you're not going to get the full move. It's not I wouldn't say it's the best way, and I think that's the problem with futures products. If you're trading, futures-based ETFs or indexes, that's always going to be a problem. Okay, that's it. I'm going to wrap up. I know it was a short one today. Oh, we're at 42 minutes. Perfect. I'm getting near my 30-minute time allotment. Tomorrow, we can have a good show. We're going to have Bill Addis on the program. And, of course, by tomorrow afternoon, you will have heard the rate announcement from Chairman Powell. Did anybody here, I'll leave it, I want to see if you guys could say here, if you are into the rate increase. You guys have been following this one. You guys know I've been waving the flag saying, no rate increase, please don't do it. Has anybody following the Fed funds futures? Did you see what just happened today? It ticked up, and it ticked up sharply. So let me bring this up for you just because, my 0.2% just went to zero. So here is the updated probability. Let me refresh this one. Because there's now a 99.8% chance of a rate increase, 99.6%, and a 0.4% chance of a 50 basis point increase tomorrow. So it's not even on the table. There's not one trader out there believes that there is going to be a pause tomorrow. So I most likely am going to look like a lunatic tomorrow. But you guys can see right here, we should have a 99.6% chance of 25 basis point increase, and now it's starting to creep in a 0.4% chance. I just don't quite get why we would see that, but hey, as they say, markets can remain irrational longer than you can remain solvent. Now, earnings-wise for tomorrow, you do have some big names as well. I will bring this up here as your Wednesday. You have CVS, Qualcomm, PayPal. You have Energy Transfer Partners, Kraft Heinz, Shopify, one of Larry's favorites, reporting earnings tomorrow. And you can see there the AMC and the BMO, which means after market close and before market opens. Thanks, Lisa. And here's your economic calendar for tomorrow. Now, we know the big stuff is going to be that FOMC statement, but there are some other pieces that are important. That's going to be new home sales, which is going to be 30 minutes into the trading day. You have crude oil inventories, and then really the fireworks. And again, do not be in a trade at 11 a.m. Pacific or 11 a.m. Pacific time, right? Most likely stay out. It's going to be volatile. You'll have a big spikes when he says whatever the heck he's going to say. But it's this 11:30 mark that's the real wild card. That will be tomorrow's not August 2nd. Did I say August 2nd? Oh, yeah, you're right. I think you caught me on that one. Why am I on August 2nd? Great point. I'm not sure why I'm there. Thank you, Lori, because those were not the right earnings. These are the right earnings. A completely different set. See, this is why I need you guys. You help me when I'm just moving too much. She's correct. The 26th, which is tomorrow. This is the right earnings. I apologize. Thank you for catching me on that one. Man, I hate making mistakes like that. AT&T, Boeing, Tilray Brands, which my guess is Tilray won't report tomorrow. All these cannabis companies say they're going to report and they never do. Coca-Cola, Lam Research, Align Technologies, another one of Larry's favorites, and United Rentals. So there you go. Thank you for the correction, Lori. I appreciate that. If companies continue to earn record profits, well, would that drive up a different kind of inflation, making money harder to borrow, balance that? Yeah, I think it's going to just skew the dynamics, and again, when I make the reference that markets are like opening up a watch, one of those old classic watches, all those pieces, one of those pieces right now is companies are killing it with earnings. And as they continue to do so, what's the impact for our markets going to be? Well, certainly it's good if they're beating earnings because that means job creation. So those companies will get bigger and they'll take that money and either invest it in their company or pay out in dividends, and et cetera. Most likely they will invest it in the company and try to grow that company. So that's good. More jobs, more expansion. But does that ultimately drive prices up? It certainly could, right? Because now you might give your employees raises. That means more money is being given to customers or to employees. That means more spending. But again, that's a win-win for the economy. Because the more that employees make, the more likely they're going to spend. And that means other companies that are maybe tangential to that specific business start to do better as well. So it could certainly have a positive impact on inflation. And maybe that's the piece I'm not seeing, which is, why do they keep wanting to raise rates so aggressively? And maybe they do want to just choke the economy substantially for a while before they take their foot off that brake pedal. Good question, Dave. All right, so that was your earnings there, and we have our economic calendar. At least on this one, I know I'm on the right day for the economic calendar. Let's go make sure. Wednesday the 26th. Yeah, I got those statements there, and the one I'm very interested in is new home sales. right? We've seen that one increasing. You notice the past few months, the past few months have been increase, and a big jump in the June reading. They're expecting it to pull back a little bit to 726 for this current reading for July. So should be pretty good. All right, that's going to do it for me for today. Again, we have Bill Addis on the program tomorrow, trying to figure out what on earth the Fed and Jerome Powell has been doing, what they are doing, and maybe with some of the stuff I couldn't see from the press conference because Bill tends to know a lot more about Federal Reserve, Chairman Powell, and their intentions and actions than I do. So if you guys have questions for Bill Addis or myself, send them in at TraderMerlin@gmail.com, or as many of you did today, send them in on our YouTube channel. I say our YouTube channel like I've got a huge team. On my YouTube channel, which is Trader Merlin. Pick any video, you put your comments down below there, and I will get to those and add them to tomorrow's show. So thank you guys so much for joining me on today's show. Hope you did well, and we'll have some fun on tomorrow's as well. Take care.